Hi, everyone. Thank you for joining us today for How to Lock in the Full 30% Solar Tax Credit Before It's Gone webinar. We'll give everyone just another minute or two to sign on, and then we'll dive right in. All right, let's get started. We have a jam-packed agenda for you today. First, I'll introduce our incredible speakers. Then we'll cover everything you need to know about the solar tax credit in 2025. We'll also touch on tax incentives for energy storage systems. Next, we'll walk through exactly how to claim the solar tax credit. And finally, we'll leave plenty of time at the end for your live questions with our experts. A quick reminder, please use the Q&A feature throughout the webinar. If we don't get to your question or if it's something that's very specific, we'll make sure an energy advisor follows up with you directly. And no need to take furious notes. We'll be sending out the recording of this webinar before the end of the week, so you can revisit all of the information. All right, let's get started. I'm so excited to introduce our two speakers today. First, we have Jeremy Vaide, a tax attorney at Stein Sperling. Jeremy handles some of the most complex tax issues people face today, including clean energy credits, so we're thrilled to have him here to explain the latest changes in our industry. And next we have Eliza Vaide, Energy Sage's Director of Inside Sales. Eliza works closely with our team of energy advisors, helping thousands of homeowners navigate the process of going solar. And yes, if you're wondering whether they're related, they are. We have Eliza to thank for connecting us with Jeremy. With that, let's get started. Eliza, I'll hand it over to you to kick things off.
Okay, great. I'm excited to chat with you all. Jeremy is my brother, so we are indeed related, and I'm really excited to have him join for this webinar. All right, so a little bit about Energy Sage. We were founded in 2009 and launched the solar marketplace in 2012 with some funding with the Department of Energy that helped build this marketplace of ours. So we currently cover all 50 states as well as Washington, D.C., and our marketplace covers both residential solar, storage, community solar, as well as a heat pump marketplace. Next slide. All right, so the solar tax credit. So that's really why you're all here. So a little history of what it is. So the investment tax credit, or ITC, as we like to call it, it allows you to claim 30% of the cost of solar energy as a credit to your federal taxes. So the year that you install the system determines how much the cost that you claim as a credit. So if you install in 2024, you would claim in 2025.
And this is usually one of the most common questions, whether payment versus installation, and it's when the installation is complete. So it's, if there's a crossover between one year and the next, you really need the installation to be done this year.
Exactly. So as you may have heard, or why you might have joined this webinar, is that the ITC is actually expiring this year. So you may have heard about this little bill called the One Big Beautiful Bill Act, and it really fast-tracked the phase out of the solar tax credit, which was previously going to last quite a bit longer. But now this is the year that you need to essentially install the system, which we'll go into a little bit more detail if you want to claim it. You have to have the system completed, and we'll go into what that means, by December 31st, 2025. All right, so the timeline on how to actually claim the ITC. is it takes about, I would say, 12 weeks, as you can see here. And that would probably on average, but it could take a little bit longer. So we strongly recommend folks, if this is something that you're serious about, to move as quickly as you possibly can. So if you much shorter window, you probably have a few more weeks, maybe a month, to kind of get connected with an installer. You will roughly claim on average around $9,000. That's around, I would say, like a 12 kilowatt system. That's the national average. And it comes out to around $9,000 in tax credit savings.
But it is important to note that there isn't a cap on the credit. So if you have a larger system that you want to install, or if you really want to go kind of like, all crazy on the system, get the biggest thing you can possibly get,
Right.
it's just a 30% on all the expenditure. So there's really, the sky's the limit on that one.
Yes, exactly. So there's electric bills have been going up. People's electricity consumption is increasing, and so, as my brother indicated, Jeremy, that you can go as big as your house allows and be able to claim 30% on that without a cap. All right, next slide. All right, so how does it work? So it's a dollar for dollar reduction on your federal tax credit. So the first, you must owe taxes to claim the credit. So there must be some amount of tax liability. And so once tax liability is not large, if it's not large enough for the entire year, it can get rolled over for the subsequent years. There's no income limit. And you can also claim it if you go the loan route, but you can't claim the federal tax credit if you go for a lease or a power purchase agreement. And that's because you don't own the system, a third party owns the system, and so they will be the ones claiming that tax credit.
An important sort of note here is that if you have withholdings, like if you're you're a W-2 employee and you have federal income tax withholdings throughout the year, you're making estimated payments throughout the year, this very likely could end up resulting in a refund to you at the end of the year, because it'll essentially lower the amount of taxes that you owe to less than what the withholdings were, which is what produces the refund. And that could help in financing the system potentially.
Exactly. It's part of why the solar has grown as much as it has in these years, is because of how advantageous this federal tax credit is. All right, next slide. All right, so who is eligible? So your solar PV system has to be installed between January 1st, 2017 and then December 31st, 2025. It has to be located as residence of yours. So you have to own, it has to be also your main residence. You own the solar PV system. So that means, again, you're not leasing or not doing a power purchase agreement. Your system is new or being used for the first time. So you can't be like claiming the tax credit for a system that has been operable for a couple of years. And it can only be claimed on the original installation of the solar equipment.
But importantly, you can add to a system. So, I mean, if you have like, let's say you had 5 solar panels, you wanted to get 5 additional ones, you could claim the credit for those 5 additional ones.
Yeah, just on that
Yeah,
components, but not on the
exactly. The sort of routine maintenance, that kind of thing is not going to satisfy the requirements.
All right, so what's covered by the tax credit? So only certain pieces of equipment related to the expenses are eligible. So those said, like almost everything within the contract with the installer. So the cost of the solar panels, all labor costs of installation, permitting, inspection costs, developer costs. That's all baked in to the overall project cost, and that all gets claimed under the federal tax credit. Yeah, additional equipment, inverters, wiring, all of that. Energy storage as well. So if you install a battery backup system, that would also fall under that. And sales tax is on eligible expenses as well. All right, so what's not covered by the tax credit? This definitely comes up in conversations with contractors, but and very often they may infer that a re-roof could fall under the tax credit, but it is not. So any roof materials or structural components generally do not qualify. So I want to make that clear. It's just the system itself. As Jeremy already mentioned, maintenance costs don't fall under the tax credit either. So cleaning or repairs and any other like miscellaneous expenditures. Interest zones or financing, anything like that does not fall
But
under.
there are certain types of solar panels that can essentially act as roofing, in which case those could qualify. So
Yes.
there are sort of these kind of edge case scenarios where you can make it work. And also, if there's something that needs to be done that is necessary for the installation, that's also arguably could be included in the cost, though it can be an edge case.
Yeah, so I would say a scenario would be like if you have to trench, so if you have to do any trenching for your system. So if you're electrical, or if you're combining two subarrays, so like you have a main system and then an additional system on like a shed, and you need to trench and install the conduit to connect those two, that would fall under the tax credit since that's required for the system installation. All right. Storage. All right, so storage has some incentives as well, as I already mentioned, that the storage is covered under the federal tax credit, so you get 30% off the cost for anything over a 3 kilowatt system, which all major solar battery manufacturers have. Their battery systems are 3 kilowatt hours or above. So as it says here, it can reduce the cost by $3,000 to $5,000 on average. So similar to solar panels, batteries must be installed by December 31st to claim the 30% federal tax credit. And
And if you have a solar system and you don't have the battery, now would be the time to add the battery because now you can take advantage of the credit for that, or vice versa.
absolutely. This is I would say the main theme of this webinar is if you can do it, go do it now to take advantage of the tax credit if it makes sense to do so. All right, next slide. All right, so continuing here, so if you plan to lease or enter a power purchase agreement for future battery storage, that won't qualify for the tax credit. So as I already mentioned, leasing and PPAs, you don't qualify for the federal tax credit. That falls under who's ever owning the equipment. So instead, the credit can be claimed by the leasing company until 2036.
And so the upshot of this is that even though the residential credit is going away, because the leasing credit for the leasing companies is staying, this should not, will hopefully not increase prices by, what's happened with the one big beautiful bill. So they'll still keep having be able to take the advantage of it. And so hopefully we'll be able to continue to pass those savings on to the consumers.
That's the hope as we get out of 2025. We have for storage and for solar a few years where leasing and PPAs are still available to homeowners. And as Jeremy mentioned, the idea is that they are passing those savings off to you. And so solar hopefully is still financially advantageous to help reduce your electric bills. All right, next slide. All right, state level solar battery incentives. So there are additional incentives both for solar and storage that do drive down cost, boost adoption. There are some upfront rebates, so direct cash payments after installation, also some performance-based incentives that's typically added to solar incentives that rewards performance over time. So essentially like how much electricity is produced by the solar system or how often the battery is getting discharged and utilized by the utility company, you get money back. we can, if there's any specific questions about your states, once you put them in, we'll be happy to kind of send you information on state-specific incentives, which there are some. And yeah, next slide. All right, some examples. All right, example 1. If you owe $15,000 in income tax and you earn 6,000 solar tax credits, your tax liability could drop to 9,000. All right, example 2. Your solar tax
Yeah, and
credit.
just to dwell on that example for a second, because I mean,
Sure.
I know it's not necessarily obvious, so if you had $15,000 in withholdings from your job, then you would get that $6,000 in cash when you file the tax return. So that's sort of how that works. But if you're like a small business owner and you're more reliant on estimated payments, then this could essentially, satisfy like one of your quarter's payments, and then you could not have to pay your last quarter, because this would end up reducing the taxes for you. So depending on the situation, you'll either get money back or you just won't have to pay when you file the return.
Yep.
Or pay less, obviously.
Or pay less. Exactly. And then in example 2, which I'm sure there's a lot of individuals in this scenario as well. So if your tax credit is worth 6,000, but you only had $5,000 in tax liability, you would owe 0 in federal income tax. The remaining 1,000 would roll over and reduce what you owe the following year. And Jeremy, you might be able to help.
Yeah, this is like a huge sort of save for this, because if it wasn't for this would like really dampen even this year's investment. So you can at least feel confident that you're not going to lose the value of the full credit if you build a system. You may not use it all up this year, but you're not going to leave money on the table just because the bill was passed. So that was very good that they left that in there.
And I don't think there's a cap on time too.
There's not a time. There's not a. I mean, I guess, yeah. There's not there's no time limit. Congress could always, intervene and essentially stop it, but that would be extremely, extremely unusual.
Yeah. So you in theory have unlimited amount of time to claim that tax credit. In general, what I've seen, I think a large majority do claim it the first year. Otherwise, I would say maybe 3-ish years. Very unusual to go anywhere over like 5 years to claim a full tax credit. It would have to be a very, very large system, or you'd have to have very low tax liability. All right, next slide. All right, claim the tax credit. Okay, so how do you claim the solar tax credit in 2026? So step 1, determine eligibility. So as we've already mentioned a couple times, you must own the solar system to qualify. So again, that would be either cash or loan option. That would qualify, but it can't be a lease or a power purchase agreement. You also have to have a tax bill in order to receive the federal solar tax credit to make sure you have enough tax liability to qualify this year. Otherwise, you have to roll over your credits over the following years. All right, step 2, complete IRS form 5695. You can use Energy Sage as a guide to fill that out. We have some resources there. If you're filling it out yourself. Otherwise, make sure you have all the supporting documents for your solar installation ready for your accountant or lawyer to help file form 5695 for you.
Yeah, and even if you don't have an accountant do it for you, I would highly suggest that you keep that information handy, because in the event that you do get audited, you will need to produce that information in the context of an audit. So regardless of whether you're having your accountant do it or you're doing it yourself, you definitely want to keep the support for at least 3 years, which is the general audit period.
Yeah, good to keep all the documentation handy. And then step 3, add to schedule 3 and form 1040. So once you've completed IRS form 5695, you'll need to use some of that information to fill out Schedule 3 to claim both non-refundable credits like the ITC as well as refundable credits. Then complete Form 1040, which is the principal form you use to file your tax return. And I think that's all there. And then this is a example form from last year, 2024. It's probably going to look pretty similar for next year. And it's relatively straightforward. All right, let's go to the next form. All right, that's what we got for at least high level. So we have a lot of time for questions. So let's hear them.
Yeah, to start it off, we'll go through the 4 most popular questions I'm already seeing here submitted. All right. What do I need to do right now if I want to claim the solar tax credit?
Yeah, so the system does need to be installed. Most installers, as I mentioned before, so say it's going to take 60 to 90 days between signing the contract, work, permitting, installation, final connection, and inspection. And again, that assumes a lot, everything is going smoothly, and kind of where you live. Which I can't remember if the next one, but we could probably go into like what do we mean by like installed and operable to really claim the tax credit this year. Yes, so as we see here, it needs to be installed by the deadline, and while interconnection and full payment are likely not necessary, it could be interpreted differently. I might defer this to Jeremy.
Yeah, I mean, certainly not full payment, but a question that we often get is, does it have to be turned on and sort of like feeding into the electrical grid? Well, I mean, you can have a system that's never connected to the grid, so that by itself shouldn't be an obstacle. However, if you don't have some kind of confirmation from the installer, or if you were to do it yourself, for instance, you sort of have to ask yourself, what is the objective proof? And this is sort of how I think about it. What is the objective proof that you have that it was installed? And that's kind of a different way to look at it, because if the only proof you have that it was installed is that your electric bill went down, then you probably want to have that electric bill in 2025. But if you have like an invoice or some kind of final, posting from from the installer that says it's ready to go, then that's probably sufficient.
Yeah, so there's like there's like PTO documentation, which is the documentation from the utility company that it's now, you have what we call permission to operate. But the installer also, they are checking the systems, they do the full install. And so they also may have some additional documentation indicating that it is operable, that it's tested, it is connected, and essentially fully installed, and now we're only kind of waiting for it to be kind of officially permanently turned on to the utility company. So as Jeremy mentioned, I do, if we want to hedge our bets, you want to make sure you have some sort of documentation that's indicating like it is totally operable and ready to be working.
Yeah.
All right. How does the tax credit work with different financing options? So cash purchase, the most straightforward option. So you pay cash, it's usually in multiple payments. Just to kind of give you a little overview of how it usually functions. Most installers ask for, I'd say like 3 payments. So part of it up front, part of it when they acquire equipment, and then part of it at the end. Whether it's like installed or turned on, it kind of depends on the installer. So that's pretty typical. And you can claim the full 30% tax credit for your system. Solar loan, I would say, works pretty similarly. You can claim the full tax credit if you finance, and your loan doesn't have to be fully paid off. Most loans range from anywhere from like 5 to as long as like 25 years. And like you can definitely claim the federal tax credit if you have like a 25-year loan without issue.
And this is just an incredible benefit and extremely unusual, frankly, in the in the credit, in the kind of federal credit context writ large. The fact that you kind of get the credit for it even before it's all paid off is a great benefit. Now, you may not use it up all in the first year, as sort of we said, but then you'll carry it over from year to year until it's all used up.
For sure. Yeah, it is a pretty, again, this is why I think solar kind of grew as much as it did. The tax credit is a really powerful tool for folks to be able to afford solar and take benefit of that either year one or over time. And then leases or PPAs, as again mentioned, the tax credit goes to the company that owns the system, not to you directly. So these financing options will remain available after 2025, which is great. So solar there'll still be some options for folks that can't do like a cash purchase. And ideally it'll still drive down the costs since they're getting the tax credit. So they'll kind of give that cost savings over to you, we hope. But it will be phased out over time. All right. Can I roll over my unused solar tax credit? Yes, as we said, you can indeed roll it over, and there's no kind of official date for that, so you can, in theory, roll it over for many years. It just needs to be installed by the end of the year and qualify. So if you miss that window, you will not. You'll get no credits for the system. All right.
All right, I have our first live question.
Great.
Would you, looks like it's for Jeremy. Would you recommend increasing your W-4 withholding in order to owe tax and receive credits next year if you don't normally owe tax annually?
Like in order to say the question again, in order to like produce a bigger refund, repeat the question.
Yep. Would you recommend increasing your W-4 withholding in order to owe tax and receive credits next year if you don't normally
yeah,
owe?
okay. I understand. So this is a misconception. So the withholding is not the taxes that you owe. Like you owe the tax based on your income. And what the W-4 does is it just tells your employer how much money to take out of your paycheck to satisfy the liability. So I wouldn't, if anything, you'd want to reduce your withholdings, and then you wouldn't have to, you get more money each month, but because you had the credit, you wouldn't owe the tax at the end of the year. But frankly, I wouldn't advise you do that anyway, because don't monkey around with the W-4 if you don't need to. But the more you're withholding, it's basically like a tax-free loan to the government. So you really want generally speaking, your withholdings to match what your final income tax liability is going to be. So I wouldn't use that as a strategy. I would just, generally speaking, if you're every year you get a refund or pretty close or owe very little based on your current withholdings, I would keep your W-4 just the way that it is. I wouldn't change it in any way to accommodate for this. If anything, I would reduce it slightly.
All right, next live question. You mentioned that to be eligible, it had to be on the main residence. Is that accurate? Because some people have second homes that they want to add solar to. Will the tax credit not be available for that?
Yeah, so there is some guidance that you can have it as long as it's a residence and you're not also renting out the second residence, then you can potentially claim the credit on the installations on the second home. But you have to actually live there for a period of time during the year, and there's no specific guidance on the number of days. At least they haven't posted that as of yet. And you can't rent it out to anyone else. So
yes, sorry for the confusion. Yeah, it's a little, as Jerry mentioned, it's a little murky, but you have to live there. It's what I've kind of read and my understanding was like, it's kind of based on, which I don't know how they would track this, but like what percentage of the time you're in that residence, like, is it kind of potentially correlative to kind of the tax credit? But I'd say at a minimum, yeah, you have to, you have to live there. It can't be a rental.
Yeah.
To get the tax credit.
Okay, next live question. If you have old inefficient solar panels, if you replace those, does that count for the credit?
If you're like, if it's like ripping it out and like installing something brand new, then arguably that could qualify. But you would have to be like essentially removing an old system and replacing it in full with a new one, not just repairing an old system.
Yeah, so like it wouldn't be like just replacing one component of it. So
Yeah.
not just the panels, it'd have to be panels, inverters.
Because it has to be like an original use. That's sort of the key phrase. And so if you're not like sort of ripping it down to the studs and making something new, then the fear is that you're not going to satisfy that original use requirement.
This question might go to Eliza. Have you seen contracts that allow homeowners to get out of the contract at any time? For example, if the installer doesn't get the system installed before the end of the year.
Yes, installers may have some language where I don't usually see that you can get out of the contract, but that they may provide some sort of discount, or they may essentially absorb or eat the cost of that tax credit. So I have seen that. It's really pretty specific, both like location and individual installers, depending how big they are. But you know, if they've already ordered equipment and are already down the path of getting, and they pulled permitting, it's very difficult. There's a lot of sunk costs there at that point. So if they miss the deadline, I would just talk to the individual installer about like what happens if you miss the deadline. Some may put additional language where they essentially will give you some sort of cash or discount on the system, but it's very specific.
Okay. This question, are components that are not necessarily part of the solar panel system, but are added at the time of installation also covered by the 30% credit? For example, if you want to install an EV charger when you install solar panels, will that be included?
Okay, well, the EV charger could potentially get credit under the battery provisions. So, you might be safe for that. But the statute talks about on-site preparation, assembly, or original installation of the property. Those are the things that are sort of undergird what defines the components that you need for the solar panel. So as long as it fits under what the definition of labor cost is under the statute, then arguably yes.
Yeah, so like another would be like an electrical panel upgrade. Like if you are swapping your panel with a new one, either that's larger or a smart panel, that would fall under the system and fall under the tax credit. And I believe like if they're what I've seen is like if they're bundling all these like electrical components into the solar install, because very often like even the EV chargers then also connected to the electrical panel, all of that, you could kind of claim that under the tax credit, because that's like usually how they like write out the agreement with the consumer. That's all under kind of one large installation agreement.
Great. All right, next question. If you own a duplex, do I need two separate systems? And if so, can I claim ITC on both units?
Yeah. I'll take a crack at this one first, Jeremy, and you can
Go
provide
ahead.
color.
Sure.
So when I've talked to individuals, so you need to own the building like first, and you're living in one of the units, and someone else is living in the other unit. So you could potentially have two separate systems. It really depends on how much the roof size and how much electricity you use. So it gets a little messy, but usually there's it's like one contiguous roof, right? So you have like one roof line that you have to install the system. So really you can only install one system most of the time. And what I usually recommend is like we funnel it to your unit first if you're looking to offset your energy bill. And then depending on where you live, you can kind of fill out some documentation that essentially funnels any excess electricity to that additional unit. If it's like a side-by-side duplex, you may have enough like kind of more clear delineation where you could install, it's like 2 meters, you could have two separate systems. So it frankly has a lot to do with like how the building is designed. But those are kind of the two, I guess, ways you can design two separate systems that you funnel into the two separate meters, or it's one system where you funnel the energy to your unit first, and then any excess potentially you could essentially give to the subsequent unit.
Yeah, I mean, this is an interesting question, and I don't know that it's fully contemplated by the statute, but I think if you own the building, and you live in one of the units, you could conceivably use the whole roof for you.
Yeah.
So, you wouldn't have to, you wouldn't have to sort of limit it based on the other person. I mean, it's an sort of interesting situation. If you both own the unit, then, you could split it potentially.
Yeah. Which I would in some states that's definitely allowed. It's documentation with the utilities. I'm not sure if all states can do that, but it's essentially the utility. You work with the utility to essentially be able to split the electricity production across multiple units, which is possible. Hopefully that answered your question.
Now we have a great question here. If you're a co-buyer and not married and file your taxes separately, but you split the cost of the system 50-50, do you have to split the tax credit or does only one person get it?
Say it again.
So if you're a co-buyer and not married, so you file the taxes separately, but you did split the cost of the system 50-50, do you also get to split the tax credit or does only one person receive it?
Gotcha. I think if you're, I think if you're, so this is like a tenancy in common ownership is what we're talking about from like a property law context. So you both own the property, and you both pay. I mean, you can both build and both pay as much as you want, I believe. Whatever your agreement is. I mean, presumably your agreement's only, if you're only entitled to half the roof, then obviously you can only build on your half of the roof. But, I think if you are co-owners and you both want to spend money, you can either split the cost and share in the credit of like a single like integrated unit or do your each separate ones.
Okay. Next question. Does the Form 5695 need to be filed this second year as well if the full credit wasn't used that first year?
I don't think so. I think it's just a carry forward. So I don't think you have to continue to file the form.
Can you claim the tax credit for solar on a property that you rent out Airbnb?
No. Has to be your residence.
This is, I guess, question if it's under like an LLC. So it's under kind of business expense. Could you go that route?
Yeah, but then they wouldn't be able to claim, the LLC wouldn't be able to claim the residential tax credit.
But you might be, because there's the commercial incentive too.
Yeah, I mean, sure. If we're talking about commercial incentives, then there's potentially other ways to do it. But under the residential credit, you wouldn't be able to do it. Yeah, sorry. Thanks for that clarification.
But I guess a follow-up, because yeah, we're specifically talking about residential, but I guess in theory, you could claim a commercial incentive, but I honestly would have to kind of dig into that a little bit more as well.
Awesome. I think this next question is for Lisa. Shopping advice. Given the holidays are coming up in November and December, do you still expect the 90 days for an entire installation process?
Yeah, it's a good question. What I can tell you is what we're seeing on the energy sage marketplace right now is that installers are saying that they can still get the system installed before the end of the year. And that those installers that can't, we are kind of tracking that really closely, and essentially they're no longer quoting on the marketplace. And so I don't know if you're gonna love this answer, but it's essentially like a day by day situation, which is why like urgency is critical. Because we have installers that are still able to do it, but as more time passes, they will just be getting booked out farther and farther. So what I'll say is that yes, you still have some time. I don't think these contractors are going to be taking the holidays this year. They know this is the time, so they're all going to be going on vacation in January. So they probably will be working through Christmas to get as many installs happening before December 31st.
Dressing up as Santa Claus
Yes, exactly.
while doing the installs.
You might see some, Santa installers this year.
Awesome. We're getting a bunch of building questions. So for example, if my plan is to build an outbuilding for the solar panel on the roof, battery storage and related equipment, this will be completed this year, but the house will be completed next year. Am I still eligible for the credit because the system installed on the outbuilding will be completed?
Okay, so this is specifically addressed in the statute. So when the solar panel is in connection with construction of a structure, then the installation is only considered to be sort of like have occurred when the original use of the entire structure begins for the taxpayer. So this is actually a little bit different than when you just slap it on the roof. Now, I mean, I guess it sort of depends what if it's like a pagoda and you are putting the solar panel on it, I mean, you could use a pagoda even if it's like half constructed or whatnot. So potentially, you could argue your original use like begins before then. But if you're like, I don't know, like building a garage, like a standalone garage, and it's like unusable except for like the roof and the solar panels are on top, there is a fear that that will not satisfy the requirements. Like if the door, if the garage door can't open and close, and it's going to be very, very fact specific. Certainly if it's like a dwelling place, like if it's an actual house, and if you can't live and sleep in the house, and it's like new construction, then it's pretty sure that you're not going to be able to claim the credit unless the whole house, and you can like get the certificate of occupancy for in 25.
We're asking for, I see a few questions here just asking to clear up how the tax credit is paid out. So example, it's not clear to me what would cause the tax credit to be paid to me in the form of a tax refund versus not paid to me and rolled over to the next tax year.
Okay, so let's do like some easy, let's do like some easy math. So let's say that like you make $50,000 a year and your tax liability is $3,000. Okay. Then you have and you had, you're a W-2 employee, and so you had withholdings that are $3,000. Okay, so you had just enough withholdings to cover your taxes. So if you didn't have the tax credit at all, and you were just filing your tax return, then you wouldn't owe anything and you wouldn't be getting a refund, right? Because the amount of taxes that were withheld from your paycheck was enough to cover the taxes. If we now introduce the credit, and the credit is $3,000 because you built a $10,000 system during the year, then you would get a refund of $3,000 because now your tax liability is being reduced from $3,000 to zero, and you had $3,000 of withholdings, which is why you get the refund.
This is a good question. Can installation tools be claimed by do-it-yourselfers? So for example, I purchased a hydraulic auger for the installation of my ground mount system. Can this be claimed as a part of the install?
I don't think so.
Yeah.
Because it's not part of the construction itself.
Yeah, right. Yeah.
If you're
If you,
attaching the auger on top of the roof at the end, then maybe.
yeah.
But I don't think you can sort of like use the residential credit to sort of subsidize your like ongoing roofing business going forward.
But like if you hired, like if you bought the equipment, but you hired someone to do the work to assist with the installation, that would, I would believe, covered specifically in service of installing the system. But the equipment, yeah, I don't think so.
Yeah, I don't think you can. I don't think you can. Your equipment is going to be considered a.
Because you could use it for something else in theory too.
Yeah, exactly. Right.
Install.
Right.
Good question.
Elisa, this might be for you. Have you heard of PPAs where the solar installer owns the system for perhaps 5 years and then sells them to the homeowner for $0 at the end of 5 years? This would be a way for the installer to pass along commercial 30% tax credit from top line of the install price.
Yeah, this this sounds familiar. Jeremy and I, we were chatting a little bit about this. Yeah, I think it's possible. I mean, what I was reading, I would have to. So yes, I think that's you could possibly do that, but I would definitely need to look at the contract because each contract is very specific. So I would say, like in theory, yes, I think that is feasibly possible and legally would work, but the devil's in the details. So I would have to take it like case by case on like the PPA product itself. I don't know, Jeremy, if you have anything to add there.
Yeah, I mean, like you're not getting the residential credit in this arrangement. So that's off the table for you. So as the consumer, I don't know that you are particularly vulnerable to this type of transaction, except that you might be overcharged potentially because essentially it's not a straight lease, it's like a lease to own. So that might be reflected in the price. Now, I do think that the seller is taking a risk in doing this because if it's all sort of premeditated, then there is a possibility that the IRS would look at this and say that this isn't a real lease in the first place. And so we're not going to give the leasing credits. And so we're going to essentially disallow this credit for you 3 years from now when this like company gets audited. So I think that the seller is bearing more of the risk in this situation, though the buyer is bearing the risk in the sense that it might be more expensive than a traditional leasing product.
We kind of touched on this, but this is a nice different way of rewording it. If I live with my family and want to install solar on our house, but I'm not on the title, can I still claim the tax credit, or do you need to be on the title of the house?
It has to be the taxpayer's dwelling unit and used as a residence by the taxpayer. So I think if you're not an owner of the property, then you can't get it.
Yeah, So,
but I mean, look, you could do like a quick claim deed and like add yourself to, if it's all like family members or whatnot, presumably you could get added to. I mean, there's a lot of considerations there. So I wouldn't go jumping headlong into like, adding yourself to the title. But I mean, in theory, as like a law school question, if you were added yourself to the title, then potentially you could.
I'm seeing a few more of these questions trickle in, so I'm just, if we can re-clarify. Does the system have to be installed or also inspected and have a certificate of operation from the power company before the end of the year to qualify.
So the phrase that's used in the statute is installed. The question is, what does installed mean?
Yeah.
And it's inherently ambiguous, right? Because, installed could mean that it's just usable, right? I mean, if it just is generating electricity and you could like plug something into the wall, you disconnect it from the power grid, okay? And all you have is the solar panels, but you plug something into the wall and the lights turn on, I would argue that's an installation. And so, you don't need anything else because if it's usable, it's installed. However, there isn't really specific guidance on this question. So, they IRS could take, and I could see reasonable people interpret it differently, that you need to have all the requisite permitting and inspections and whatnot all satisfied, because otherwise you're essentially like operating it impermissibly, and so we're not going to give you credit for that. So it's unfortunately a somewhat inherently ambiguous phrase, and so to be conservative, you want to kind of do everything and get all the stamps and the like, it's we're installed and you're ready to go from some kind of outside person, whether that's the utility company or the installer, because you run the risk that an auditor would look at it and say, no, because you didn't get that, we're not going to say that that's installed.
Yeah, I think the DI off-grid systems do also qualify, right? So,
Yeah, exactly.
so if we kind of also use that as a rubric, right? There would never be a in utility documentation because you would never be connected to the grid. So you would need some other documentation indicating that it is operable, which I would say have to come from the installer, right? The contractor has like gotten some sort of electrician to come out and indicate, yes, this is working and it's operable. And
Yeah, but in like the super unique situation where you installed it yourself off grid, take a picture.
yeah,
Take a picture with a date stamp
that it's working.
that
So
it's working.
yeah, I know that's like everyone's like itching for like like something super specific here. And Jeremy, you can clarify. I think most individuals agree that it has to be installed and has the ability to be turned on, but to have that extra step for permission to operate, which could take weeks for the utility, if not months, for the utility to accept, which because they will be getting a lot, like a big influx. Obviously, like everyone's coming here wanting to do install, and that is totally out of the hands of the homeowner, which I think in most cases, as long as it's like fully installed and could operate on its own, you should be able to qualify. But I do with an asterisk that the language is ambiguous, and so that's what we believe it to be. But if you really want to be like for sure, then get the permission to operate. But I do think that is less likely.
Yeah, I mean, at the end of the day, there isn't like a case on point on this question, but if I was arguing it, I would argue that exactly what Elisa said. As long as it is usable, as long as it can be used, I think you're good. The question to me would just be that how are you going to prove that? And just be mindful of how you approve that to a third party who doesn't know anything about you, your system, or anything. So I would just think about the proof in that situation.
And I think this will be our last question, but this has come up a few times. Can you re-explain it what to do about when the roof has to be reinforced to hold the panels as a part of the solar system? Would that structural improvement be included in the overall cost of the solar system?
Yes, that would be.
Yeah.
So like if you needed to like shore up the roof, so you had to do like essentially shore up your rafters or add some additional supports Yes, that would qualify under the tax credit because it's a requirement for the installation itself.
Exactly. Is it necessary for the installation?
Yeah.
And, presumably whatever the installer is telling you is necessary for the installation is necessary for the installation. So,
Exactly.
that's what you're going to rely on. And I think it'd be pretty hard to
To prove
kind
other.
of, yeah, to disprove that.
Great. Thank you again to our fantastic speakers, Jeremy and Eliza. Below, if you want to reach out to Jeremy, his information is provided here. And to reach out to Eliza's team of energy advisors, you can use this QR code provided.
Awesome. This was really fun. I'm glad we were
Great.
able to do it.
Yeah.
Definitely.
And we have plenty more information if you visit our Clean Energy Tax resource page. So definitely check that out. And lastly, if you want to keep the conversation going, please join our new Facebook group, Energy Sage Neighbors Network. This community connects homeowners at every stage of their clean energy journey. It's your space to ask questions, share real experiences, and help fellow homeowners make informed decisions. So thank you again, and I hope everyone has a wonderful rest of their day.
Thank you.
Thanks,
Bye.
everyone. Bye-bye.